You like, share, subscribe. You don't want to miss up and coming interviews. Let's get it. Scene 4, episode 4, the fourth floor. Thank you for joining. Yo, let me tell you something. I just had the best interview ever. It's going to get better from here, but I just had the best interview ever. Let me tell you something. Tory Turner from World Financial Group, Tory Turner Consulting. I got to say thank you, brother. You gave me inspiration. You gave me hope. You gave me knowledge. And I'm pretty sure the people who are going to listen to this, they ain't going to feel the same. Guys, this is the interview you don't want to miss. There's so much talk, right, about compounding interest, whole life insurance, cash value, taking money out of your life insurance policy, living your life and investing in yourself and creating generational wealth. I got to say, this is the interview. If you're interested in learning what an annuity is, what whole life insurance policy is at cash value, and what to do with it, this is the interview. I want to thank y'all for joining. I want to thank you for spending some time with me. This is it. And I got to say, I'm excited. Tory was very informal, very laid back, very in his zone. And that's what I wanted. I knew the brother going on 20 years now. We went to college together. And I got to say, I seen tremendous growth. He's married now. I believe he just had his first child. And I couldn't be more proud of him. I couldn't be more proud to call him a friend. If you're interested in learning more about him, you're going to have his contact information in a minute. I suggest you email him, call him, text him, get the information you need, because this is how the wealthy get wealthy. This is how the wealthy stay wealthy. Whole life, cash value, insurance policies, annuities, investments, right? This is what you want to learn. This is what you want to know if you want to get out of the rat race of turning your wheels in the mud. If you want to break generational curses, this is the interview that you want to dive into. I just couldn't be more proud to have someone I know come this far. And Tory, I got to say thank you again, brother. I'm pretty sure that your phones are going to blow up. What we talked about was vital to the growth of not only small businesses, small business people out there who are looking to become small businesses and fire their boss. This information is for you all. Every single individual who is under the sound of my voice, this interview was for you. And I got to say again, this is going to be a magnificent journey. I can't wait for the other interviews to come on. I can't wait to post this. I can't wait for Business and Bid to grow and reach its full potential like I know it's going to go. And guess what? It just gets better. The next interview, the next segment, cannabis conversations, but that's for a whole nother episode. We're going to talk about Tory. We're going to talk about whole life insurances. We're going to talk about annuities. We're going to talk about generational wealth, breaking the generational curses. Check my boy out. Okay? Check my boy out if you want the information you need to stop being broke, to stop robbing Peter to pay Paul, robbing Paul to pay Peter, borrowing money from your moms. This is the interview you want. Take notes. Study. Take it serious, because a lot of people don't, right? A lot of people are comfortable in their mediocrity, living their mediocre lives, looking down on small businesses and people who are willing to take the risk. Well, you know what? I'm willing to take the risk. Who else is? Who else is ready to start on their dream and stop living somebody else's. Now, again, I want to reiterate, if you're a 9 to 5 type of person, more power to you. If you're making the money that you need. Hey, I know a woman right now who's working 2 40-hour jobs at the same time because she's good at what she does. She likes nice things. She takes care of herself. It's not the fact she doesn't need a man. I'm pretty sure she wants a good dude in her life. But at the end of the day, she's doing what she has to live her life. Now it's your time. Now it's time for you to integrate this way of thinking. You work hard. You work long. Why not put all that effort into this type of information for you to get out the rat race? Now, I understand she works 2 40-hour jobs and she's good at what she does. But I can't do that. Right? She got that hustle. You got that hustle. But not everybody wants to do that. Right? Some people like their freedom. I might not make all the money in the world. I got 2 small businesses, but you know what? I love my freedom. I like to be a financial literacy coach. I like to be the mortgage broker. I like to, be the marble restoration expert. But it all boils down to my freedom. Who's with me? Who understands that concept? But before I start, I gotta shout out 2 businesses locally. The first is Wake and Bake Dispensary. That's right, cannabis dispensary, over on the west side off McNichols near Southfield. I got to know these brothers. Yeah, I was a customer. Don't judge me. But I got to know these cats, and I got to say, I'm really impressed. You can tell they lived in the streets, but you can tell that they're educated. You can tell that they're smart because they have a well-oiled machine over there. And they're personable. They're not knuckleheads. These people converse, laugh, joke. They're about their business. They're about their security. But at the end of the day, I was able to connect with them. So to the people out there in marijuana world, don't forget to check out Wake and Bake over on McNichols near Southfield. My second one is my own business. I think it's about time I give myself my flowers. That's right. I want to talk about my business. You know why? Because I can do it. Marble Stone and Shine. I'm shouting you out, baby. I'm shouting you out because you're the only minority restoration company that deals with natural stone in the whole state of Michigan. I'm shouting you out because there's only 5 companies in the whole state of Michigan that do what I do. I'm number 6, and I do 90% of the work myself. Located downtown Detroit, the Big D. I want to shout myself out. I just want to, let me give myself a pat on the back. And it's not going to stop. It's not going to stop. I just want to say to everyone out there, thank you for joining, man. You on the ground floor. You're at the beginning. Primo. Let's jump into this because Tori he has so much good information, man. I got to say, Tori, man, it was a pleasure, bro. And I hope people do reach out to you. I really do hope people understand this type of information. I hope that they, reach out to you, brother, because I really feel that you're a jewel in this community. I really feel that your services, your product, they afford you a life that you deserve and riches that you dream of, my friend. Congratulations. We're going to be jumping into this. Mr. Tory Turner, ladies and gentlemen. World Financial, let's go. Welcome. What's going on? Thank you for joining the show. Thank you so much for joining the show. So today's a special show. We got Mr. Tory Turner, right? Is it Tory Turner?
Yep,
Tory. I want to thank you for your time. I want to thank you for taking some time out of your busy day, your busy schedule, setting it aside to join us on Business and Bid. For those who don't know you, please introduce yourself, what you do, and who you work for.
First and foremost, thank you, Gregson, for having me on your show today, man. I really appreciate the opportunity. And again, Gregson introduced me. My name is Tory Turner. I'm, I give you a small background of me. I grew up in Georgia originally, small town called Manchester. I got to shout my town out where I come from. And right now, what I'm doing is I'm currently a financial consultant, and I work for a company called World Financial Group, which I'm an independent, a licensed broker with when it comes to that company.
Okay, okay. And it's
Financial Group.
World Financial Group. How long have you been working for them?
Oh man, I've been with the company for about 2 years, 2.5 years.
Okay. And what's your major, I would say, product? Like, I know that you did or you do insurance and life insurance and things like that. Do you do all insurances or you have a specialty? What's your specialty?
Primarily life insurance and annuities.
Life insurance and annuities. Okay, cool. I've heard about those. I know a little bit about that, as a financial literacy coach. But I primarily focus on credit, mortgages, and debt. Life insurance is something that I am interested in learning, and I'm pretty sure we're going to have a conversation after the interview about that. But
Yes, sir.
tell me more. Tell the viewers more about, say, let's start off with life insurance. Okay, what are the different life insurances that are out there?
So you have many different types. So of course, you have the term policies. You have, and I'll give you detail of each one. Term
Okay.
policy is basically what it does is you can have a term policy for 10 years, 15 years, 20 years, 30 years. And what happens is with that time frame, it'll expire. So it has an expiration date on it. So think of it as, it's for a short gain. It's for a short time, temporary. It's one of the cheaper versions of insurance out there. A lot of people utilize it for mortgage protection and just, to cover yourself in the event that if something was to happen. So it's something that's going to cover you for a short period of time, but always remember that it has an expiration date on it. And so we have whole life policies, and whole life is basically insurance that covers you for a whole life. It's set in stone. This is what you pay, and then it's like, hey, this is what you get. Then we also have what I like and what I thrive off of is the index annuity, the IUL. IUL is a big performer right now currently because of what it does is it gives you the idea you have the best of both worlds. You have the insurance portion of a policy, and you also have a savings account portion of the policy. So that one is one that it grows tremendously. So it can compound as high as 13%, and it's a really good one in the market. And so those are the main three that I like to discuss when I talk to different people.
And that's a IUL or ILU?
It's called the IUL, Index Life Annuity. Index
Okay.
Life, I'm sorry, insurance, I'm sorry.
Mhm. Okay, okay, okay. You mentioned something that is very interesting, and you said
Yes, sir.
compounding interest. Now, I do have a slide, and as a financial literacy coach, again, dealing with credit, mortgages, and debt, I touch on this.
Mhm.
And I have a slide here. Let me do a little screen sharing if you'd give me a second. We talk about compounding interest. Okay. And it's really important for people to understand compounding interest versus simple interest. Right. Now, follow me and correct me if I'm wrong, because this is very important. And for all you guys out there, like, share, follow. I'm all over Spotify, Amazon, Apple. Go to the YouTube Business and Bid. Follow me, share, like, do all that other good stuff, because there are so many interviews coming up, just like this one, filled to the brim with information, and you don't want to miss out on up and coming events. So, correct me if I'm wrong, Tori. You have simple interest, compounding interest. Okay. Now, the most important thing, and just cut to the chase, is uh the red boxes. Okay. Now, as an example, these are basically the same interests percentages over a 5-year span. Just as an example, you have $1,000. Now, let's say I have a whole life policy and I invest $1,000 into it. Simple interest, I'll only get 5% at the end of the year. Correct me if I'm wrong at any time. At the end of the year, that 5% off of that 1,000, I'm only yielding $50.
Correct.
So at the end of the year, I'm looking at a gain of $50, which equals a total, if you add them together, 1,050. Right now, over the course of 5 years, I'm only yielding through simple interest $50. $50 a year, $250 after 5 years. Is that math correct?
Yes, sir.
Okay. So when you move over to compounding interest, and again, if you guys want a visual out there, I know this is a podcast, but if you want a visual, go to my YouTube channel, Business and Bid, go to the Facebook group, Business and Bid, and it'll be up. And you can pause, write it down, take a picture, do what you want to do. If you're using the same $1,000 through compounding interest, yeah, you get $50 off the 5%, which equals $1,050. So at the end of that year, they'll have $1,050. But the difference is when it comes to compounding interest, what's ever left over at the end of the year gets attacked by another 5%. So now that $1,050 at the end of the year becomes $11.0250, right? Right. So this is the compounding interest. It doesn't stop after 1 year. For the life of that policy, it goes. This is a 5-year example. So at the end of the 5 years, instead of $1,250 through compounding interest, it balloons to $1,566 at the end of the 5 years. Correct?
Correct.
All right. So this is telling me that I'm gaining a lot more through an insurance policy than a simple savings.
Correct.
Right? And truth be told, and you probably know more about this than I do, that you're really not going to get 5% rate return ROI on your money in the bank.
Nope.
You're not. 2, 3, maybe 4% if you're lucky. Right? So this is actually overpricing. Now, according to this, Tori, and we both said that you're really not going to get a 5% yield on a bank unless you got a lot of money or whatever the case is, depending on the bank. What is the ROI, the rate of return? What is the average interest rate that someone can see if they say deposit $1,000, like this example shows?
So think of it as, and then Gregson, as far as compounding interest, the way to explain it, the best way to explain it to me is for my viewers and for people is think of it as you're rolling a snowball down a hill. So
Okay.
you start off with a small snowball, and as it gains momentum, it constantly grows and grows and grows. It builds and builds and builds. And once it hits the bottom of the hill, you got a big snowball. So think of it as in that term. And it's one of those things that compound interest has been going on for the beginning of time. I think Albert Einstein was the person that said that compound interest is the 8th wonder of the world. So this is what makes the rich get richer as the life goes on. And so that's a part of, like, whenever it comes to the compounding, and in terms of when you deal with it in an insurance format, a whole life policy would get you maybe 4 to 7, depending on which company you go with. It usually will net you roughly from 4 to 7% gains on a compound per year to year basis. So you're constantly gonna, whatever you make in that time, it's gonna constantly roll and roll and roll and continue to rinse and repeat over the course of years after years. Now, also, the one that I like to use is the index annuity, the IUL. The IUL, it actually is really cool because, well, again, what it does is it has a savings account in it, and it also has the insurance portion of it. When you're dealing with the savings aspect of it, it's based off the S&P 500. Most companies that I work for, they'll have a cap. The cap, which means that your money will actually grow up to 13% in those different funds. on a year-to-year basis. And then on a down market, it would grow 0.075. So in terms, when it comes to that, you're looking at your savings account that you have in your bank is making 0.003% on your money. So you're not making any money on that. And the bank is utilizing your money to make other money. So it's like they're making a killing off of your money when it comes to that.
Right. They'll lend you money at a 12, 13, 18, 17% interest rate, but only will yield you said roughly 0.005 or 0.05 or some ridiculous thing that's far below a point.
Yep.
Not even 1%. So that brings me to the question, because I've been getting this question a lot, and you're seeing more and more inquiries about it, people asking questions about it, because you're starting to see it all over the internet, is the idea or the concept of taking money out, right? Taking money out of your life insurance. People might do whatever they want with it, invest it or splurge or whatever they want to do. Explain that aspect. You're taking money out of your insurance policy, either to invest it or do something else with it. How does that work when someone, from the compounding interest aspect, they want to take money out of their policy and live and do whatever they want? Explain that a little bit.
So it's two different parts of that. So whenever you're dealing with insurance, and then you have that, what we call it in the insurance business, a cash value. What happens is, in order for you to take money off of that you have to have the money in your cash value to take off. So prime example, let's say, for example, a client of mine has $100,000 in cash value into their policy. What they can do with that $100,000 is they can take a portion of it, take out a loan of that cash value. Let's say they want to buy a car. Let's say they want to spend $60,000 on a car. They could actually go into it and take a loan off of it, take the $60,000, purchase the car, and in their life insurance policy, it will still show up as $100,000 cash value in the policy. The cool thing about that is the money that you still have in there is going to continue to grow interest on it. Now, the catch 22 of it is, what happens is, of course, you would want to, because you borrowed that money from it, you would want to pay that cash back to your life insurance policy. But what does that do for you? It eliminates the bank having to charge you the 13-14% that they pocket in their money, in their pockets. It actually gives you the opportunity to put more money back into your life insurance policy. And so it constantly is like a rinse and repeat. I like to call it, and most people call it, the term infinite banking when it comes to that. So you're borrowing money from your life insurance policy to pay something, and then you're paying it back. To the working person or somebody on a simplistic form, is you think about it in terms of, hey, if I just purchase that car through the bank, if I don't pay my car note for the next 3 months, 9 times out of 10, the repo man is going to come get your car. So fast forward and you transition to a life insurance policy. If you paid it through your cash from your life insurance policy, nobody's going to take that car away from you. But now, if you forfeit and you decide not to pay that money back from what you have, what happens is it will take it off of your cash. It will take it off of your death benefit.
So is it fair to say that $100,000 would drop to $40,000 because you withdrew 60 and didn't pay it back?
But what happens, that'll take effect on the death benefit of your life insurance policy. So that wouldn't affect the cash that you have. It would still show up. It would take it off, but of course, the death benefit would be the place that it will take it from.
So it's going to get paid back, whether it's you paying it back or on the back end if you perish. Okay, cool. That's really interesting to know, because a lot of people are having this conversation now, and this whole woke type of environment now. We're walking around with computers in our hand, and people are starting to inquire. People are starting to ask more and more questions about legacy, about leaving something behind for their for their kids, you know, bettering or their quality of life, you know. So I think that um life insurance can be a good alternative to just having a savings account. And in fact, it might be a better one. You know,
Now,
in your opinion, do you think it'd be a better investment to actually start a policy through you or a representative like yourself than putting money in a bank?
I would say make sure you do both.
Mm,
I would definitely say do both. I would definitely put you on a if it was up to me, I would strategize having money in the bank, of course, because that's something that you can get a hold to at any given moment. When it comes to insurance, you know, of course, you would call up an insurance agent or you call up your rep and say, "Hey, I need to take X, Y, and Z out." So that could potentially take at least a day or possibly 2 days to get that money transferred over into your account. So I would definitely say keep both of them, but make sure. And I like to strategize and tell people make sure that you have an emergency fund. That's number one. And then
mhm.
once you get that emergency fund built up to your liking, then transition over and start to funnel money into that particular life insurance policy.
So basically what I'm hearing is diversify. You
Yes,
know, you
definitely.
want to have
Put all your eggs in one basket.
okay, okay. So when it comes to your services and you know, you have a LLC, you know, you're an independent agent. Where do you service? Are you a national brand or are you just held within a specific location?
So I have license pretty much in all states. I can cover pretty much every state here. I mainly do a lot of business out of Georgia. I do a lot of business out of Florida, Alabama, Texas, and Mississippi.
Okay. So do you go and find business? Like you have your own business card, you know, might be shopping at Kroger one day and say, "Hey, I sell life insurance. You need some life insurance." Like, how do you go about getting your clients as a contractor, as an independent
So
entity?
so the approach of telling people, "Hey, I sell life insurance," that's a bit scary because a lot of people they start to think about, man, life insurance is, oh man, that's something that
Mm,
I'm going to I need it, but I'll think about that in my later years of life. So I like to
mhm,
talk. I don't tell people as far as like, "Hey, I sell life insurance." I basically tell people that I'm a financial consultant, and what I do is basically help families save money, create legacy, and figure out ways that we can help you guys in your retirement ages. So,
mm,
so I try to cover different portions of their life that may accommodate to them. Whether it's my son needs money. I just had a newborn baby. Let's try to set them up with a college plan. Let's strategize on those different aspects of their life. So I basically cater to whatever the needs of the person is. And so what I do is I go out and of course I have my business cards and everything. So I talk to people through that, but just basically a simple conversation. If I'm in the gym working out or, I run into somebody, at the mall, if I'm dressed up somewhere, they might ask where I'm going. And I just, have spark a little simple conversation and just to see, what they are, where their knowledge is when it comes to finances. What do they do?
mm, mm. Are there any links that people can Google, you know, and want to find out more information? You know, what is the first step that someone might take in learning more about what you do?
Okay, so I mean, you can Google different companies. Like I support over 100 A-listed companies from the
Mhm,
Transamerica's, Prudential's, Pacific Life's, Fidelity's. Just the list goes on. So you can actually Google and research, through each one of those different companies, the different companies and the different insurances and the different features that they have.
Okay, so it again because of this generation, we are walking around with computers in our pockets,
Mhm.
right? It's so simple. The information is readily available. So do you deal with small businesses? Is this only for individuals and family men, or do you service small businesses as well?
I do service small business as well. We actually have it's what we call the key man insurance policy that, and I'll give you a brief example of what that is. It's basically, for example, if me and you would go into business together, Gregson, and you have a valuable skill set and I have a valuable skill set. And let's say, for example, something happens to me, heaven forbid, something happens to me. Now, you have to figure out how do I replace my partner, and B, he was a great asset to the company. So now I have to figure out how do I support, his lacking or what he did, and the money that he's bringing into the company. What do I do? So with the key man insurance, what it does is it pays out that portion to take care of your partner's portion of the business. And so you can, until you get on your feet and you take care of things. And so that can be split up amongst a group of people. So it doesn't matter. It can be split up against 5, 6, 7, however many people, but it's all connected to a group insurance.
Through the small business, you guys are coming together basically to fund the policy. And if someone passes or someone decides to just leave the corporation or the company, there are funds to actually fill in that gap.
Yes, sir.
Oh, nice. Now, we talked about people living and withdrawing from that account and paying it back, like you gave an example of buying a car. I'm pretty sure they can do whatever they want with the money, invest, buy property, do whatever. When they decide to pay it back, is it revolving? How does it report on the credit? And do they have access to it again? Is it revolving?
Yes, they have access to what they have in the cash value. They can borrow up to 90% of what they have in the cash value.
And when they pay it back and that balance is zero, would they have full access to the 90% again?
Yes, sir. Yes, sir.
So will it show up in or on the credit report as a revolving account? How does it show, or does it show on the credit report?
It doesn't show up on your credit at all. It won't show up at all.
Oh, okay. Are there any chances of someone defaulting?
Yeah. Mhm. If someone defaults on that money, then of course it would take off on the portion of the insurance policy, which is called the death benefit.
So how can someone default other than dying?
Well, that's the only reason. That's the only way that you can default on paying that money back, is if you decide not to. Just like, hey, I'm going to keep paying my policy like I normally pay the premium each month, and you just happen to just not pay that portion back.
So premium.
Yes, sir.
How is that premium decided? Are there like limitations like age, health? Are there things or parameters that premium is based off of?
Good question. So yes, health is number one. Age is another thing too as well. So of course, we're the healthiest that we're at this point that we're ever going to be in life. So it's like you think about it in terms of no matter what, like you can go to the gym and work out at 40, 41, you can be in better shape than you were in 42, and vice versa. But you're at the healthiest point of your life at this given moment. So health does play a major portion of it. And again, age and health, that's the two categories. So you have to make sure, not really, with my company, what I do is I can help any family. So it's not, I can help a person that has diabetes. I can help a person, I've helped clients that had AIDS, so it just ranges, it varies. So it's not, we can help any family. So but it's those key components are age and health, of course, that determines your premium when it comes to insurance.
Are there health questions and a physical involved?
Some companies, some portions, depending on how much insurance that a person wants, it can they would sometimes have to do the physical, where it would be a urinalysis, or they would do blood work, whatnot.
Oh wow. So I would take it like life insurance. You hear life insurance, and you said age. So is it the fact the older you are, the higher the premium and the less you're entitled, or is it vice versa? The younger you are, the more money you're entitled. How does that aspect work?
So the younger you are, the cheaper your life insurance is going to be.
Mm,
And the older you are, it's like the more expensive your premium is going to be.
mm,
Because the thing is, they look at mortality when it comes to insurance companies. They look at, everybody, it's sad to say, but age, color, they have a demographic, they have a chart that actually shows like your groups and your life expectancy, where you are, where you live, all those different things play a large portion. And when it comes to how much money they're willing to give out on a death benefit.
Even lifestyle. If I'm wrong, correct me.
Correct.
Let's say you're a risk taker. You like to skydive, snowboard, and surf. Are those hazarded conditions that you are willingly putting yourself through as far as lifestyle is concerned? Does that play a factor?
Absolutely, yes. A lot of companies, if you're a risk taker like that, they'll ask questions like that whenever I go in to write a policy or I talk to them, or the underwriter would give a speech and they'll ask those different questions. Hey, do you skydive? Hey, like what's your, and of course, if you say yes on it, that's one of those ticks that, of course they'll be like, we don't know about this person, because insurance companies are in the business to, make money and of course pay out money too as well.
Right, right. Wow, this is some great information, man. Um, I'm pretty sure you speak to a lot of people. I'm pretty sure even shopping in Walmart or just getting a haircut and hanging with the boys, that questions like this come up all the time. In that type of environment, what do you wish you would see more of, like from either a family man, family woman, or a small business who who have questions or don't really know or assume one way? What do you wish that you saw more from these type of individuals, whether it's small business or individuals?
One thing I would love to see is I would love to see more people that look like me in this particular industry. That's number one. Number two, a lot of times whenever I talk to different people, I get the aspect of, hey man, what do you think about this aspect of life? And a lot of times, the education piece isn't there for a lot of families. They you hear on the radio, you hear people talking about legacy, 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 but a lot of times people don't know how to start this legacy. And so, my job is basically to educate people on, hey, from getting you to from point A to point B, this is the goal that you want. Let's work on different ways to get you to what you need.
So more people who look like us in this role. What do you think is the biggest roadblock preventing people who look like us to enter this world?
I would say the fact of not knowing the steps of what it takes. A lot of people they like the idea of I want to be more aggressive, want to know more about finances, want to know more about saving, but I don't know how. And so these are things that are not taught to us in school. And so you have to kind of pick these things up along the way. Again, like you made a good point about, you got your computer in your pocket. A lot of times we have to do our research, do our own research. And sometimes it's so much research out there that we get confused at times. And then once we get confused, we end up putting things down and just putting it down.
Right, right. And that kind of brings me to my next question. Enrolling. Uh if a small business wants to enroll, or you know, an individual wants to enroll, is there a better part of the year? Is there a better time of the year that someone should enroll, or there's no better time than now?
It's no better time than now. It's no better time than now. A lot of times I get the people, a person that always says, hey man, I'm gonna wait till my birthday. No, you want to do it whenever the opportunity comes available. Do it. Don't wait for your birthday, because again, each year brings on a more expensive premium.
Mm. Now that's important because your premium is paid every month.
Yes, sir.
Right?
We can do it now. You can do your premium every month. You can do it quarterly. You can do it yearly. So it depends.
Wow, Tori. I got to say, man, listen, for the people who don't know, me and Tori go back 20 years, right? We went to college together. You know what I'm saying? And like I was telling him before we started during the warm up, um, you know, when you look back at your life and birds of a feather flock together. So when you know people that you can literally say, you know, I knew this cat for 20 years. 20 years I knew this guy. We went to parties, we hung out, you know, had a beer or two, you know, just all over the place on campus. And then 20 years later, 10 years later, it's like, wow, you're actually successful. You actually put your actions, you know, to words, and you became something that you already visualized. So I just want to say that I'm proud of you, brother. I am so happy that you spent some time with me. I'm going to be posting your information, both phone number and email. I'm pretty sure people are going to want to ask you specific questions. Um, Now, you don't do you have a brick and mortar, or are you everywhere as an independent entity and you're licensed all over? You can go state to state. You're not just local, right?
Correct. I can go anywhere I want to. I love it because I can set up a Zoom meeting anywhere. So I can be on
Mm,
vacation, set up a Zoom meeting, and I can talk to my people in California. It just varies.
mm. Okay, that's great news. I do have another question. Pertaining to taxes. Is this a tax write-off? Are there any tax benefits to taking advantage of a life insurance policy?
Oh man, good question, Gregson. Man, awesome. So with what I like about the insurance part of everything, and as far as, let's say someone someone passes away, and once
Mhm.
they pass away, the money that they have that they transfer over to you is tax free, 100%.
Mm. Say that again.
So the money
I mean, that was just too good. Say that again.
So the money that's in an insurance policy is basically tax free. So if someone transfers money over to you from an insurance policy, you don't have to pay taxes on it at all.
Now, what do you mean sign over to me? Let's say I had a brother and my brother says, you know what, I got a $200,000 cash value life insurance policy. I want to give you 50,000. He can literally just give me 50,000 tax free. Is that what you're saying?
When he passes away.
No, I didn't mean to laugh like that.
When he passes, in the
So,
event he passes away.
oh, okay. So he's on his deathbed, be like, you know what, Greg, I loved you all your life. I
Yeah.
got 50,000 for
Yes, sir.
you. And I don't mean to laugh at death. I don't. It's just when you come across this type of information, you wonder why people aren't taking advantage of it. And we talked about legacy, you know, leaving something behind for your kids to call their own, planting a seed that they can build on. You know that song by the OJs, Papa was a Rolling Stone, you know, I think it was the OJs. But you know, basically Papa left us debt. When
Mhm.
he died, he left us debt. Do you feel that your product, your services is vital to generational wealth?
Yes, yes. And the reason why I say that is in the event of, I hate to say this, but we all have to leave here one day.
Right.
It's a given. But what you do and what you provide for the upcoming whatever you have. Let's say I like to utilize the family, your wife and husband and wife. The husband passes away one day. Now they have to figure out what they're gonna do.
Mm,
That's an income in their household that has to be replaced.
right.
And so with the life insurance portion, setting it up, structuring it the correct way, that wife doesn't have to get a job. Their kids can go to college. They can continue to live like they normally live. because you set up and you put that insurance policy, or you put something in place for your family.
Mm. And you said structure.
Yes.
How would someone who is young, has their head on straight, heard about this type of thing before, what is your advice to them to properly structure this thing?
So you would definitely want to get someone that is licensed in this industry, that's very knowledgeable, and to sit down with them. And the whole key to it is you want to strategize your game plan. Talk to somebody like myself. Tell me, hey, you have your goal. You want to retire at what age? You want to do this with this particular in you want to do whatever you want to do with the money that you have. So, you have to structure these things correctly. And once you structure those things, man, stick to your goals, stick to your basics. And then one thing, when it comes to your financial professional or financial consultant that you do talk to, always have that relationship with them. The clients that I have now, I talk to them. I make sure they're good. I check on them all the time. Like, hey, did anything else change? Because life changes. People have babies, kids, kids go off to college, things happen. So you always want to be basically a part of that family, that family structure. Let everybody know, hey, this is my guy right here. I get invited to barbecues and cookouts all the time. Like, this is my right-hand man right here. So I feel accomplished when I get those invites.
Nice. When it comes to properly structuring, I'm going to be interviewing someone when it comes to business structure, setting up the LLCs, going over the difference between C corps, S corps, and stuff like that. But the topic is going to be trusts. So I want to ask you, when it comes to this type of cash value life insurance policy, and I'm pretty sure I'm pretty sure of the answer, but when you take money out, is it smart to put it in a trust?
So structuring your business, structuring your insurance, I would definitely say a trust. Trust, if you structure your life insurance policy through a trust, that money is going to constantly grow and grow and grow through generations after generations, because you have a set boundary, or you have something set in place that no one can touch.
Well, Tori, I got to say, man, you're dynamite, bro. You are dynamite. And I'm pretty sure that the people who are listening to this are taking notes. If they're not, shame on them. Shame on them for not paying attention. You don't have to be a big wig. You don't have to be Liberty Life Insurance and all the big 5-star commercial this, Super Bowl commercial that. You just have to know what you're doing and be licensed, right? Someone like you who is personable, approachable, tangible, right? You're not a real big star that, no one can touch me, no one can, approach me. I think it's important for people like you, hands on the ground, feet on the ground, tangible people who are educated in their craft to be reached out to. Yeah, it's good. You probably do some cold calling and door knocking or whatever it is, whatever the case may be. But with this information, especially now, I think it's vital for the people who are listening to this, pick up the phone, right? It's your responsibility. Products like this, the information falls in your lap, but it doesn't mean anything if you don't take advantage, right? So for whoever is listening to this episode, I want you to call my man, Tori. I want you to email him, even if it's just to ask a question. Get educated, get the right information, because it's vital to generational wealth. And you hear that all the time, and you're starting to hear that more and more on TikTok and Facebook, generational wealth. Well, here it is. Here's the information. What are you going to do about it? Hey, Tori, listen, I want to thank you for your time, my bro. It was a pleasure. Would you do me the honor of coming back?
Absolutely. Anytime, man.
Hey, listen, I gotta say, I can't wait to put this together for the people. I can't wait to, just put it everywhere, man, because people are gonna miss it. This is the ground floor of Business and Bid. And I want to thank you, my old friend, for being a part of it, for trusting me with your time, and upholding you in the brightest of esteems and shining a light on you, because you're a jewel in this community. And like you said, we do need more people who look like us in this business, because there's nothing better than working for yourself. Even through all the ups and the downs, and you got to hustle and you got to eat what you catch. So there's really no hourly salary. This is a good product to take advantage of and to sell. So that leads me to this final question. How does one become an agent?
Oh man, they can actually reach out to me. I can put them in contact with my team, and we can go from there, man. I love to have them a part of my team. Our team is growing.
It just starts as a conversation. That's what I'm talking about. Hey, Tori, listen, time is up, my friend. We're actually about 10 minutes over, 11 minutes over, but I got to say, it's infinity, right? It's infinity with you. Like you said, you do this, son. I could talk about this all day, son. That's great. That's great to hear the passion. It's great to hear the love of wanting to help people create generational wealth. I applaud you, my friend. My guy, you're 100% you're freaking awesome, man. So until next time, I want to thank you again for spending a couple of minutes with me going over this, and I'm pretty sure this is not going to be the last time we see each other, friend.
Yes, sir. Yes, sir.
All right,
till next time.
Yes, not a problem.
Peace, man.
Oh my God, man, some memories. They ain't ready for that though, man. They ain't ready for the memories, bro. That's a whole. They ain't ready for the parties in College Woods, bro. They ain't ready.
We shut it down, man. I blame you for it.
Oh, you blame me for it, right?
Yeah,
of course, blame the host. I'll take it. My shoulders are broad.
Yeah.
Blame the host. But you know what? I want you to blame me when your phone blows up. When people say, "Hey, I saw you on that podcast. What was that? Yeah. You the insurance dude." Blame me for that. Blame me for that.
Definitely, absolutely, man.
My guy. I appreciate you, my friend.
Yes, sir.